Welcome to the Market Alert for Tuesday, the 4th of June 2019. So a lot happening in the markets yesterday. Tech wreck, Trump's bullard bounce, and the dollar dumps as bonds and bullion jump. And if the bonds have moved higher, the yields have moved lower. We'll come back to this in a bit. There's a lot in here that I want to have a look at and bring to your attention. So let's first start off with the pound for yesterday. The market finding some support as more candidates come forward for the Tory leadership, and this seems to be supporting the pound at the moment. Don't know why. Back above the 76% retracement and moving higher here at the moment. So if we go from the recent high down to the recent low, watch this level 127 on the nail there, just to see if prices will hold. We'll just get rid of this one here and save it. So watch this level. In the intraday for yesterday, the market didn't seem to do an awful lot, apart from the only obvious thing here is again down to the DP below the 200 bar moving average, and then the market rallies back 76% from here to here, and then 76% here, also the 200 bar moving average, and then back through as the market moves higher and the dollar moves lower. And I'll explain why the dollar moved lower in just a moment. So a bit more activity yesterday in the pound, but not a great range. The high to the low was just 50 pips there. Meanwhile, in the Dow, the daily chart, I spoke yesterday about the market rallying back to fill the gap, and that is precisely what happened. This is how these markets work, and in particular the Dow at the moment. They want the market up. They're going to fight as much as they can to keep the illusion alive that the stock market is all fine and well. So let's look at this in a bit more detail. So after uploading yesterday's market alert, I went back to the Dow and had a look at where the gap was. The high overnight was 24,736. That's after the gap, and also tied in with the 200 bar moving average. So I thought it'd be a good idea just to see how they would bring the market back in the pre-market session. And you can see them doing exactly this. We got to the gap, the high, and then we see them bringing the prices through. Market comes back down to the 200 bar moving average, tests it, and this is what I've spoken about before. Wait till the market comes back, tests it, and then you'll see prices generally bounce off this level. And this is how it kept going until we got to the main event. Prices just moving higher and a bit volatile, up and down, up to the DP level, but the gap well and truly filled. And then a bit later on in the session we get this, and I wondered what it was. And again, we'll look at that in just a moment. That's the bullard rhetoric about reducing interest rates to support inflation. I mean, guys, honestly, it drives me nuts. They say there's no inflation, so they're going to drop rates to increase consumer spending to try and get inflation up. We all know inflation's running around 10 or 15%, as I've said many times before. If you look at the John Williams Shadow Stats website, he does the true calculations of inflation, but this is the smoke and mirrors of the Fed. So the market then moving down a bit before the close, and then if we move to what happened overnight, you will see that prices after the close came down to the 200 bar moving average, or just before the close, and then as soon as they tested, they drove the market all the way back up once more. And as we move the chart across, you will see at the moment we are above both the DP and the 200 bar moving average. So the market at the moment trying to bounce. We can see some buying for yesterday. The market will need to move higher. Let me just get rid of these two here, and let's just put in some markers. We'll start off with the high of this bar and this one, because the selling has taken place here. So both of these are key indicators, and from a a retracement point of view, I'm going to use the high of this bar down to yesterday's low. Watch this figure here as well, 25.041, if this market starts to move higher. However, if it fails to do so, I'm going to click twice on the low of this bar, and if it takes out 24.681, then it will also have a run down to the low as well at 24.601 that it saw yesterday. So this way we're covered on both sides. We'll let the market tell us what to do instead of trying to forecast. But all of these areas here crucial in this market, so keep an eye on them. Economic news. Oh look, we've got Powell out today at 2:55, 25 minutes after the market's opened. Interesting to see if he will concur with what Powell said yesterday. I'm just going to move over to here and have a look at a few charts and show you what's going on in the background of all of this. We've got China opened optimistically but faded soon after the open, only to flatline during the afternoon session. We've got European markets with the opposite, opening down, then ramping all day long. And then this was the bit yesterday, double whammy from Bullard. Boosted stocks briefly, but battered bond yields. This is the last thing he needs. So at 13:25 EST, Eastern Central Time, Bullard rate cut may be warranted soon to lift inflation. I mean, what utter nonsense, to put it politely. And then at 3:05, Bullard's inflation below target is another rate cut argument. And you'll see there that the 10-year yield took a battering following these comments, and also the dollar as well, because the dollar likes rate increases, not cuts. But the tech probe trumped the Fed put today. Try saying that after a few beers. Dow ended up S&P red, and Nasdaq clubbed like a baby seal. So again, but what's interesting is this is the FANG stocks: Facebook, Amazon, Netflix, those sorts. They're also coming in for a pounding. Nasdaq sent into correction territory, and the credit markets. This is where it gets really interesting. The credit markets are starting to crack more systemically. And the chart I am after, the 2-yield effective Fed funds rate is way below zero again now as well. This is what we were like in 2008, you'll see there, so heading down nicely. The 3-month 2-year curve is also in a very dangerous area, as you'll see, back to 2008. I've not seen this for 11 years. And this is the chart I wanted to have a look at. As it says here, the entire curve is now under water, now out beyond the 20-year. So if we just move this up slightly, you'll see what is going on here. So you can see there that all of the near-term 1 month and 3 month are higher than the 20-year. So that's saying a lot. 3 month there, 2.33, and the 20-year 2.534. So not far off now, taking the 20-year out as well before long. And that gives you what we see in this chart here. There's the near term. You can see it's all starting to invert, and as we looked before, you'll see the exact same picture in this market. That's where you can see the whole near, or the short end is above the longer term, and the same here as well. But the rates were a lot higher back here, as there you go, and you can see exactly the same thing there. And both of these inversions were a precursor to a recession. So again, keep an eye on these things. Very, very interesting indeed. And yeah, cryptos, a bit of a bashing on the overnight as well. So we'll just have a quick look at this. Yesterday's 15 minute, we broke below the 200 bar moving average. We came back and had a look at it, and then the long sides didn't really do a lot, back to the 200 bar. And then overnight prices have moved lower. Some good trades there yesterday, and in the daily chart we took out the 76% retracement that we've had marked up there. If we come back to this low here to the high here, you can see that the market's finding support there at the moment, and I would be inclined to actually come back to here and also here as well. So watch the 7660 level for this market. And then finally, just a quick roundup of other things as well. The implied volatility down from 1880 yesterday, because obviously the Bullard talk of cutting rates, and no doubt they're going to do that before the end of the year. Also, as the European markets were up yesterday, we saw Deutsche Bank higher as well. Low from the open, you can see there. We had $664. We had a double test of this level, and then the market made its way back up and finished at $663. A bit of a dead cat bounce going on there as well. So there you go. It's a lot going on at the moment, a lot in the background. And so really, just to summarise, the pound being supported at the moment by either the central bank or what's going on with Westminster. Certainly not with the economy. And the Dow, of course, there's a prospect that we could see a bit of a rally if Powell says something this afternoon at 2:55. Be aware of this one with regards to cutting rates going forward to stimulate inflation, apparently. And then Bitcoin, just watch how prices trade back to the 76% retracement levels that we've got marked up here. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.